Injured. With the U.S. economy still struggling, a lot of homeowners are clearly looking to try to save money any way they can. How about your mortgage payments? Is it the time now to refinance? We're going to have some details for you, some advice coming up next. As the nation's housing crisis continues, recent moves by Uncle Sam to try to fix all of it has caused a rush to refinance home mortgages. The rates have been dropping. Many folks who own a home have a fixed 30-year rate mortgage. If you do you know the rate you're paying? Because all of the government activity right now to get things back on track has caused the interest rates on mortgages to drop. In some cases down to 5.5%. Can you think of that? 5.5. So if you have a good credit score, the time may be ripe to refinance that mortgage, reduce your monthly payments, save yourself a load of dough. How do you do it? Joining me now to talk about it is Peter Dunn. He's the president and owner of the financial education firm Advanced Planning Solutions, radio talk show host. Good to see you, Peter Dunn.
Good to see you.
All right, so if you're at 6 or 6.5, should you pick up the telephone and call your bank or your mortgage holder and say, hey, can I refinance?
Yeah, it can't hurt. I mean, it's all obviously depending on your credit score, the equity you have in your home, and, of course, your monthly income. So if those things haven't changed in this environment, then certainly call your mortgage broker.
If you're right on the edge of affordability, though?
It doesn't change the fundamentals of your own personal financial situation.
Right, okay.
I mean, this is a fix.
A financial consultant by the name of Jordan Goodman. He was going to be on yesterday, but because of the breaking news, we couldn't do it. He put together a really nifty graph for us. Take a look at this. It's actually a chart. $100,000 borrowed on a 30-year fixed rate. If you're paying 6.5, that's $632 per month, $227,000 over 30 years. If you drop it down to 5.5, look at that. It goes down $65 per month for a total savings over 30 years of $23,400, and that's only $100,000. Let's say it's $200,000. Then you're saving almost $50,000 a year, and so on and so forth.
Yeah, I think that's actually a generational graph, if you ask me, because I think someone in their 40s and 50s may look at that and say, hey, we're going to be in our house for 30 years. There's $23,000 per 100K borrowed. Yeah. Someone in their 20s or 30s, they're not going to live in that house for 30 years. That's just not what that generation does.
I've been in my house for about 10 years. I'm looking for another 10 if I can live that long.
Well, if you can stick with it, it's going to be good savings in the long run.
Right. Even in the short run, I mean, you're going to be saving some dough.
Yeah, absolutely. A couple $100 a month at the most, and anybody can deal with that these days.
What kind of a high credit score do you have to have? Is there a number?
720 will get you the best rate. Once you get there, if you're above 640, 650, you can still get some decent rates, but they're pretty tight after that. The lending has not loosened up as much as people would like you to think.
You got to have positive monthly cash flow, right?
Well, that just simply means that you've got to make more than you spend, and who does that these days?
Who does that these days?
What a novel concept that is.
Unbelievable. All right, there's this thing called ARC, automatic rate cut. And as I understand it, the rate falls every 6 months automatically with no fees or points whenever the mortgage rates drop. Is that true?
With some caveats there, Greg. What you deal with is it has to be at least a quarter point rate drop for it to kick in after 120 days. But your rate starts out 3/8 to a half point higher at the beginning of the mortgage terms. So that can be a little sticky. Sometimes getting too fancy can get you in the end.
But I will say, since February of 2001, I double-checked this, the rate has dropped 6 times. So if you're in the ARC program, you're doing pretty well.
Certainly.
Is all of this going to increase demand for houses, help arrest the downward spiral, or not?
This is all about momentum. That's what this is about, supply and demand and momentum. So there'll be some positive juju going in the mortgage market, but this isn't going to affect the troubled mortgage holder right now.
Final advice? What do you say to folks?
Work on your core habits. I mean, let's not treat the symptoms. Let's treat the problem. Work on your budgeting, your debt. Don't just focus on your mortgage to bail you out of this thing.
Right. All right. Peter Dunn, president of Advanced Planning Solutions, radio talk show host. Good to see you. Thanks.
Good to see you, Greg.
More than 100 killed.